London is a world-class city. It's growing, it's set to grow, and many people from all over the world are coming to London and investing as a safe haven investment. It's a safe, secure store of wealth for many people. Even though London's prices have been growing since 2009, and now on average in the prime central areas stand about 20% above their former peak, London still looks relatively cheap when compared to other world cities. It's certainly on a par with Singapore and Tokyo, and well behind the cost of investing in Hong Kong.
The growth has been steady even throughout the recession. It looks to grow, and with the continuing infrastructure and input from development, retail and commercial, we'll see the continued growth.
So this year the world is looking at London because of the Olympics, and the Olympics are taking place in a rundown bit of East London, or at least it used to be rundown until all the investment poured in for the Olympics. And we now have, if you like, a modern landed estate, a bit like those that we saw in the 18th century built in central London. One's now been built in East London, and that's really going to change the nature of the East End, with young people either looking to buy cheaply or to rent. With the extra million people coming into London over the next 10 years, 20 years, we're going to see a big increase in demand for that area.
Nestled between two financial centres of the city and Canary Wharf itself, you have the largest concentration of banks and professional workers in Europe, transport infrastructure which has been improved no end in the past 2 or 3 years. The East London line now joins up through to Croydon and up beyond Highbury and Islington, and of course over to East London itself, as far reaching as Stratford. You have in Stratford the Westfield shopping centre, which is the largest in Europe, which again has a huge draw for both European purchasers as well as UK based. Gross values are looking to increase phenomenally over the next 5 years. Currently, in central east of the city, you're looking at about £500 per square foot. The likes of Stepney, Whitechapel and Aldwych, which are within a 2-mile radius of the financial centres of Canary Wharf and the city.
The investment has poured into Stratford from the Olympics. We're going to see the impact of that over the next 5, 10, 20 years. It's going to be a long-term legacy, and it's going to change the nature, it already has changed, the character of that part of London. So it's going to be much more accessible to more people, and I think it will be increasingly be seen as a desirable residential area. A lot of Asian buyers are very keen on the Canary Wharf area of London. There's a lot of new build stock has been built there, very little actually coming through in the supply pipeline. So I think that's going to become an increasingly high value area. And what you've got there is the expansion of the financial services sector into this newly regenerated Docklands area, and that has pushed prices, expanded the area that we call prime central London now. Lots of desirable riverside, waterside property in that particular location there. London has always had a lot of overseas visitors, and I don't think we've ever seen more overseas investors into London and London real estate than we are currently. Across the whole of what we call the prime area of London, about 1/3 of buyers currently are from overseas. In the very central areas, that's even higher, and in the new builds, very top end, ultra prime areas of London, it's actually over 85% of buyers are from overseas. So London is a really global city, and equity is pouring in. We think we've seen about £18 billion of net new overseas equity pour into the market since 2007, and that's a really big export market for London. London is proving to be a wealth preservation haven for all sorts of buyers from all corners of the globe. In fact, it's easier to say who doesn't come to London to buy rather than who does. So there are two big reasons really for investing in London. One that we've seen a lot of lately is using London real estate as a safe store of wealth. In fact, there's a strong correlation between activity in the ultra-prime London market and the price of gold. Clearly people are using it as an inflation hedge and a store of money. Another reason for investing in London, and particularly in the east and outside of the central areas of London, is the quality of it and size of income streams. Yields in London are much higher than in a lot of Asia, and especially the new markets in Asia. So you can actually find relatively cheap capital values but strong rental demand, and therefore high yields and strong income streams with prospects for growth as London grows and expands. A lot of West London is very, very supply constrained. There's very little new stock coming on in the West. Most of London's new opportunities and new sites and regeneration will take place in the east of London. And with the Olympic investment improving transport infrastructures, we've got Crossrail opening up the whole of the east end to the west and giving a route to Heathrow, for example. This means that there are some significant opportunities for new investment and the opportunities for more growth in eastern locations of London. So I've been looking at the London market now for 25 years, and during that time I have seen the prime areas of London expand significantly, so that new fashionable areas have risen in value over that time, and that's a typical story for London. There are three factors that drive that expansion and where the next new area is going to be. One is that an area becomes fashionable, new creative classes start colonising it and changing the nature of a location. You also have next door neighbours, the next door neighbour effect, where high value areas tend to spill over and start pushing into the next neighbourhood. And then finally, you've got a big regeneration story in London, with old industrial areas being recreated and developed by new properties. Additionally, it's been the West End of London that has been amongst the most desirable properties, but we are seeing a real trend at the moment eastwards, not just because of the Olympics and the Olympic legacy, but because young people and creative types are colonising the squares of Dalston and Hackney and further afield in the east, and it's proving to be a new, vibrant and regenerating location, which offers a lot of investment opportunities.